What's up, everybody? This is Jimmy with Trading Decoded. It is May 23rd at 4:08 in the afternoon. Market's closed, and it was a pretty good day in the morning. We found some great trade setups. But before we get into all that, guys, consider buying my book. It's right here. It's on Amazon. Leave a review if you do buy it. I'd appreciate it. Join our Discord community. First week's completely free. No signing up, no credit cards. Just show up. And also, we're going to do our live Let's Talk About It session tomorrow morning at 9:30 Eastern Time, and we are going to cover the topic of confidence, how to get it, how to keep it, and how to get it back if you've lost it. So if you're interested in that kind of thing, we try and keep them very focused on that subject, and we do try and keep them to an hour or less in time. So if you want to grab a cup of coffee, wake up a little bit early with me, and we'll have a discussion about things that matter most to traders. But without further ado, let's go ahead and take a look at the charts, see what we did, see what we found, and see how we made money today. Because money we made. As always, call put scenario, which was a pretty wide range this morning. The call line for us was above 505.82. If we can get above that, we want to make it all the way up to at least this point is where we had our first alert, which was 507.49. So plenty of room to go from here to 507.49, which is just above this orange dash line. Banger of a trade. And Qs kept pushing and SPY kept pushing and ADD was still printing green at this time. So we held on a little bit longer as we got up and through this level of resistance, turned it into support. I told everybody I'm still in this trade. And by the way, let's go back, getting a little bit ahead of ourselves here. The put scenario was a move below 504.21, which we never got. So that wasn't a thing. And because we started to move up pretty aggressively into the open, we did get above the call line a little early. Now, with that said, when that happens, we want to play a pullback because now we need that resistance to hold as support. When the market opened this morning, we had a gigantic printing red candle on ADD. Because of that, I did not trust the pullback here. However, as soon as this candle started to print here, we were still above the call line and ADD started to print green. That was good enough for me. Was a little bit sketchy, a little bit scary to buy in here. Now, we had a bunch of people buy the opening candle. Good for you. It worked out nonetheless, guys. The point was we wanted to get through resistance. Our stop loss was a close back below that resistance because we needed to be support. If it holds the support, we're looking to springboard up to 507.49. We had an alert set there. It got there. It got to it. It got through it. It closed above it. And it turned it into support as well. So we hang on. If we close back below that resistance, now support, we get out of the trade. Hope we leg up to the next line. So on and so forth. This ended up becoming a 37.73% win. And when you have contract prices as high as they were today, that's a pretty good payday. Was a beautiful, beautiful trade. Just needed a second to get started. It got started. It got good. And most of the people in our community were done by this time of day. Then we pulled back. We pulled back and we were seeing all the things that you'd want to see if you're trying to take puts. Now, I wasn't focused on puts at this time, but lower highs are bad for calls. So as long as you're looking for that, you want to break a level of support, hope it moves down to the next support, so on and so forth. But the key point here is as long as we're putting in lower highs, what are you not looking for? Calls. That's right. You should be looking for puts and what reasons you need to see in order to execute or take those puts. That's it. Don't complicate it. Remove 50% of your buying choice simply by following the trend. Okay? Now, while we were moving down, we did get down to, almost down to, our call line. We did say if we were able to get through support up here, we're likely to head back down to our original call line. It didn't quite make it there, but we did have some people in puts and got to make some money. But as always, if you close below a line of support, you need to keep that as resistance. If you get back above it, you get out. If that's not good enough for you, as soon as you close on the other side of the trend line, you get out. But here's what also happens when you close on the other side of a trend line, a downtrend in this case. Puts come off the table. We're no longer looking for a reason to take puts. And we were having a very in-depth discussion at this point about that because people naturally wanted to play puts still at this point. So when you ask me, Jimmy, when would you get into puts again? I say, guys, I wouldn't. Right now, I'm looking for every reason to get into calls because we closed on the other side of the trend line. Now, normally, the criteria for me is we get on the other side of the trend line and then we get above resistance. If ADD is printing green at the time, you go, hoping to make it to the next resistance. If you get through that resistance, we look for the next resistance, and so on and so forth. This entire time, we started to print green, so we were putting in higher lows. We put one in here. We put one in here at 9:58. We put one in here at 10:01. We don't want to buy in on the 10 o'clock candle. And this whole time, I was telling people two things. I said, guys, you either get in when we crack through a resistance, or for me, I'd feel more comfortable once we got back above 508.51. If we're putting in higher lows and ADD's printing green at that time, it's a go for me. We're hoping to get through the first target and maybe up to the second target. Who knows? But I did have people still wanting to play puts here. And I have to remind you guys, when we are putting in higher lows, get puts out of your goddamn mind. Please. There is a time and a place. There is a lot of people who I am keeping out of trades that will end up becoming losing trades for them because they're starting to pay attention to market structure, price action. Higher lows means the buyers are getting stronger, not weaker. And if you want to take puts, please at least wait for a close or a break of the uptrend. I still have a secondary rule that I would like to see before I jump into puts, even after a trend break, okay? So please, at least give yourself the benefit of doubt. Remember the 25, 25, 25, 25% thing, keep that in the back of your head. But it's a lot easier to look for trades when you already are focused on one side and not the other. So because of this candle back here, 950, I was telling people what I needed to see to feel comfortable buying calls. Higher lows, ADD green, break of resistance. Simple. If all those things are true, on any given time, we are more likely to go up at that point. The only thing you need to know is where that move up may struggle to continue up, i.e. look for the next resistance above your entry point. If it's too close, you skip the trade. If there's enough room to make money, you take the trade. Simple. It's not simple because of your feelings, but technically speaking, it's a simple process. Easy to follow. Two good winning trades right here using that exact mentality. As you can see, ADD's pushing up. We are coming off higher lows. We had gotten above resistance right here, aiming for the next resistance here. It got there. Took a couple seconds to go, but as long as you're above that trend line, you're still moving up. So if you close below the trend line, you get out of the trade. If you're looking for an entry, we were talking about this, again, an hour before it happened. I start telling everybody over here, no more puts. We're looking for calls. We want to wedge up. We want to break resistances. And we knew resistance existed right here on the Qs at 508.49. As we're moving up, I said, guys, this is a move that more often than not continues up. Statistically speaking, this goes up from here. Not always, but please get puts out of your head. I had a guy buy puts right here at 10.10. I said, why'd you do that? You didn't even break the trend line. You didn't even break the trend line. And ADD at that time was printing green. Okay? He bought puts because we were at resistance and he thought it was going to break and come back down. Why? What in this move to the upside gives you the idea that that's the right thing? Why don't you wait and see if that trend can continue first? Or at least wait for the trend to be over with a break of that line. He lost money on the trade. And then he asked me why. And we had a discussion about how we were talking about for almost an hour what we needed to see in order to justify puts. This was not it. And the whole time going up, I'm like, guys, remember, we're looking for calls. Know what you're looking for. Be ready to take it when it happens, when you see it. This is a minute-by-minute chart, guys. I cannot put these arrows in advance without knowing, because I know what I'm looking for, but we don't know when to go until it's happening. This is why we plan the trades in advance. This is why the call put scenario works as often as it does. We are planning to stack odds in our favor, and then we wait for the plan to be executed. That's it. This call put scenario is super aggressive. Some people believe it's not even possible. Go ask the people in my community how accurate it is and how often it works. You guys can be naysayers all you want. You know, it's aggressive. I'm not denying that. But all we're playing is breaks of support and breaks of resistance, or pullbacks to support and resistance with momentum in our favor. That's it. That's it. So we pull back, we hold the trend line. Here we are, wedging up. I said, guys, if you're in puts, this is not a good look. This is more likely to break up than down. Wouldn't you know it? One candle after that, boom, we pop right through the top. Again, my analogy for this, and I tell people all the time, is think about this as a bottle of water that has the cap on it. It's an empty bottle, but you're able to fill the bottom up fill the water up from the bottom of the bottle. Where is all the pressure going to build in that scenario? It's going to build on the top. So figure that resistance is the top of the bottle. The buyers putting in higher lows are creating the pressure up against the top. Where's the fail point? It's the top. It blows off. That's what you're looking for. Think of it as an analogy so it makes more logical sense to you. It doesn't work 100% of the time, but I promise you that setup works out to be this way more often than it doesn't. Okay, so get used to it, start to spot it, pay attention to it. You don't have to trade it. Just see how often it works or how often it keeps you out of taking a trade that you wanted to go in the other direction. Okay, so there's your second entry during this move to the upside. Then we break the uptrend. Don't jump into puts there. It just means calls are off the table. We pull back. Find a non-existent support. I mean, if you count the wicks, it was basically pulling back to support. And it bounced right back up. It hit resistance again. We put in a higher low. Gets up, and here's a point where it didn't work. Okay, here's an exact representation of this statistically. We move up, and usually it breaks through to the upside. But if you play the odds, you play the statistics, and you say, hey, this usually breaks up to the upside. I'm going to buy calls on the trend line. Your stop loss is a close back below the trend line. So if you bought here, here, or here, you stopped out at 1041. Very, very minimal loss. It didn't work out, and that's okay. Not every setup does, right? We pull back, struggle up here a little bit, and then we fall slightly. And once again, higher low. We're waiting for ADD to print some green. Let's see where we're at here. We get through resistance A, we get through resistance B with plenty of room to go to resistance C. Okay, so I said I'd rather be above not just the first one, but the second one, because there's not a lot of room between A and B, but there's plenty of room between B and C. So if we get up there and we're putting in higher lows, which we did at 1120 and ADD's printing green, let's go. Well, we go, it consolidates for a little bit, and then we break up and ultimately get to our target. Now, this may not look like a big move, but it goes from 508.44 to 509.38, almost a full dollar move. Yes, it stuttered around a little bit, but the only people that are uncomfortable in a trade like this when you're holding is somebody who might be playing a position size that's a little bit too big for your britches. Something you need to pay attention to. I'll bet you if you were playing half your position size that you were in normally, or 1/5 of the position size you might be in, I'll admit with 5 SPX contracts, when we stall like this, I get nervous. If it was 1 SPX contract, I'd hold that all day long and wait for my trade plan to play out. Either we get up to where we plan to, or we pull back, we fail to hold old resistance as new support, and I stop out of the trade for a small loss. The problem is when we scale up, the small loss is not so small anymore when you wait for the proper pullback or the proper stop loss. Okay. So this trade validated itself. It worked. It got through resistance. ADD was printing green. We struggled a little bit here at one of our fake Jimmy lines. We ultimately came through, never really broke this area of support right here. So we created a little support here and it stayed there. If we would have closed below that, we would have expected it to come all the way back down to here, but it didn't. It held. And then we consolidated and moved up to our original target. All right, but that was the last trade we talked about for the day. It was 11:34. Things got a little wonky, and but again, lower highs means we're not looking for calls. If you wait for a break of support off of lower highs, we're looking for the next support down. So this was a lower high. We're likely to break support. We didn't really break it because it was right here. We stayed right on it. Okay, another lower high. ADD starts printing red right here. So that carries us through that support. We're looking for the next support down. As you can see, we got there. We closed below that. You want that to stay as resistance. And then we want to look down for this support, which it ultimately made it to, but not before a big green move up. Anyway, guys, that's all I got for you today. Today was a good day for the patient. Today was a good day for the ready. And that is the case most of the time. So if you're patient and you're ready for what you're looking for because you're trusting the chart more than your feelings, it's possible to make good money in the stock market. And that's what I'm here to try and teach you how to do. It happens for a lot of people on a daily basis, and it doesn't happen for everybody. This is not easy to do, and it's not because it's hard to understand. It's because our feelings get in the way constantly. Okay, ruins your confidence, which is something we're talking about tomorrow morning. So please, again, if you're interested, join me tomorrow morning at 9:30 Eastern on YouTube Live. Okay, I'd love to have you. We'll interact. I'll say my spiel. We'll go over the things. I'll make my points. And if you have questions after, I will gladly answer those questions. All right, so we're going to wrap it up. I hope you found some valuable information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, as I mentioned in the beginning of this video, the links are down below. It's completely free. I'd love to have you. Also, finally, please consider buying this book right here. There's a lot of really good information in there. These videos will make a lot more sense to you if you understand my strategy completely. Okay? And with that, I hope you all have a fantastic weekend. It's a long weekend. Remember, markets are closed on Monday. So enjoy it. Spend some time, relax, party, drink, do whatever it is you're going to do. And I'll see you guys either tomorrow or Tuesday morning. Love you. See you.